SABC News. The African Perspective.
In our sports headline, World Football Governing Body has announced more investment for African football. Into Africa, racing driver Xolile Tlaka funds his own motorsport work. I'll be back with these and other stories at the bottom of the hour.
It is a very good afternoon to you, Mali, Botswana, Ethiopia, Egypt. A very good afternoon to you, Côte d'Ivoire. Good afternoon, Africa. Welcome to Africa in Business on Channel Africa. I'm Thami Ngubeni. This is where you get the African perspective. It's where we meet to look at the latest in news, sport and business. Thank you to our news desk keeping us abreast of all the local, domestic and continental and international news coming up. Do remember to engage with us on the various social media platforms on X, Instagram and YouTube. You'll find us at Channel Africa 1 and on Facebook we are at Channel Africa.
AUSISA, the Association of Water and Sanitation Institution of South Africa, is a platform uniting Africa's water professionals. This November, Africa leads the conversation on water and sanitation. Join global and African leaders at the AUSISA Africa and Global South Dialogue 2025 from the 9th till the 12th of November at the Emperor's Palace, Johannesburg. From policy innovation, this is where action meets collaboration for a water-secure future. Register today at ausisa-watersan-dialogue.org or follow at AUSISA on social media. AUSISA, working together for sustainable water and sanitation security in Africa. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 7 minutes after 4 p.m. Central African time, and as we do every single Friday, we bring you the biggest and best African stories in the world of business with none other than Victor Kgomoeswana. He is author of Africa is Open for Business and Africa Bounces Back. He's also the Executive Director for Marketing and Communication at the University of Limpopo. Mr. Kgomoeswana, good afternoon once again and happy Friday.
Every Friday, Thami, good to talk to you again.
So, I'd like us to focus perhaps first and foremost on this deal between the United States mining firm and Mali's government. Is it happening? Is it not happening?
When you hear President Trump, I will always say this. When you hear President Trump talk about the policy of the U.S., you will imagine the U.S. is not doing business anywhere in the world. But I always warn people, business people look for the return. Where they see a return, they're going to jump in. It will probably happen because Mali, if you remember, had a fallout with Barrick Gold. And you remember last week we spoke about Barrick letting go of Mark Bristow, the South African who was the founder of Randgold. So this is a mine that used to be run by Barrick, I think, in collaboration with Anglo Gold Ashanti. And it was nationalized following its abandonment in 2022. So it's obviously a mine is a very difficult business to run, and maybe that's why it might take a while. But in the end, it's going to be about the country code that's permitting up to 30% ownership in new ventures while living in the the standing tax break. So many investors are saying, well, even the Russian and Chinese are saying they are nervous about this. But where one investor sees too much risk, another company will see an opportunity, and that's where Flagship Gold Corp is finalizing this deal on Wednesday with the Malian government.
So, for all intents and purposes, they will be resuming production at Morila Gold Mine.
Yeah, but because the longer it stays, the more expensive it's going to become. Maintenance of mines is very costly. You need ventilation since the holes close up and then you have to resuscitate. So I don't see any reason why it wouldn't. But like I'm saying, when you are negotiating at national level and mining ministry level, there might be a delay here or there, but I don't see how they can walk away from this estimated 2.5 million ounces, in reserves. that's not something you walk away from in mining terms.
And let's focus on Botswana. We've been talking about them for quite a while now. And you'll remember last year there was a proposal that was put in place, a draft legislation to allow domestic ownership of mines should there be, foreign buyers interested. It looks like it's all systems go as far as Botswana ring fencing at least part ownership for local businesses.
Yeah, exactly. Otherwise, we're going to continue having the issue like we had with De Beers, where companies are arguing with governments. Initially, previously it was the right to buy up 15% shareholding in any mining concession upon being licensed, but with the option for a higher stake. Now, the company, as the top producer of mines, said in a statement that they now require 24 local ownership. I think 24%, because often when you own more than 25%, you end up making it difficult for certain special resolutions to be concluded. Most resolutions would require 75% special resolutions. So the 24%, I think, is just to make sure there's enough ownership by local investors, but it still allows the larger shareholder to be able to take decisions so that you don't get undue delays in decision making, because it can be very costly. But as well as increasing this local ownership, the law is aiming to promote value-adding activities, beneficiation, and so on, to ensure that mining companies are getting involved in environmental rehabilitation or at least beneficiate whatever they are mining in Botswana.
And that is, of course, if the government itself chooses not to buy that stake, then it's got to go to a domestic company.
Yeah, exactly. So it's just keeping it inside in Botswana. And it looks unreasonable if you are used to just owning everything, Thami, but you can hear everywhere in the world. Even, after the U.S. government insisted that TikTok should be transferred to American investors, anything is possible in business today. There's a lot of local content, a lot of indigenization, a lot of nationalism in how companies are being run or licensed all over the world.
And I guess it's a brave new world for the likes of Ethiopia, starting to finally, and I wonder, why has it taken so long for them to start trading under the African Continental Free Trade Area?
Yeah, it's non-tariff barriers, Thami. The road, there's a highway from Nairobi, the capital of Kenya, to Addis Ababa. There is a railroad as well that connects the two countries and Djibouti, which is the access to sea. So I think it has nothing other than political will and creating legislative and regulatory framework for the divvying, as they say in tax terms, the divvying, which means the sharing of customs. When you trade across borders, the customs that you share or that you levy are going to always be a source of contention. So the countries of Africa had been held back in that, if I can call it respectfully, small-mindedness of prioritizing customs instead of saying, come into our country and invest and we will benefit 10 times what we would benefit by just levying customs on what you do. So the infrastructure is there physically. The regional coordination with Prime Minister Abiy Ahmed is there, and Kenya has to recover because it's highly indebted, and the natural trading partner up north is Ethiopia.
And so there you have it. After 7 years after signing, the steel trade between Ethiopia and Kenya under the African Continental Free Trade Area now becoming a reality. Wrap up this afternoon, Victor, with great news again coming out of Egypt as far as their GDP is concerned.
Yeah, it's very impressive. 5% growth in today's environment is rare to come by, but African countries are always growing. And Egypt has been investing a lot in infrastructure, road infrastructure, port infrastructure, a bit of IT, and its financial sector being consolidated. They are expanding, going overseas with their pharmaceuticals and all that. So the fourth quarter of this fiscal year, 2024-25, is up from 2.4% growth last year. That is a huge, it's more than double. So the rebound is supported by stronger performance across tourism, non-oil manufacturing, communications, and information technology. There you have it. Companies like Orascom and all those are obviously part of this tourism with the return of tourism and travel, international travel after COVID lockdown. It's just an indication. But the government is also crediting itself for ongoing fiscal discipline and higher public investment for the sustenance of this momentum.
Really great momentum there for Egypt, seeing its fastest quarterly growth in 3 years. Victor Khumuswana, always a pleasure, and wishing you a splendid weekend ahead.
Have a good weekend, Thami.
Thank you. That's Victor Khumuswane, is author of Africa is Open for Business and Africa Bounces Back. He is the Executive Director for Marketing and Communication at the University of Limpopo, bringing you the top business stories on the African continent.
Stay ahead with Africa in Business, where Thami Ngubeni unpacks your go-to source for Africa's economic trends and development.
Let's focus now on the G20 and the just energy transition. South Africa's Minister of Energy, Kgosientsho Ramokgopa, says energy transition policies should ensure fairness and affordability, and particularly for low-income and marginalized communities, so that access to clean energy technologies is not limited by cost or inequality. He made these remarks at the 4th G20 Energy Transitions Working Group and Energy Transitions Ministerial Meeting, which is currently underway in Durban, South Africa. Now, this meeting is held under the theme Solidarity, Equality and Sustainability. Channel Africa's economics reporter Innocent Simosa has more from Durban, South Africa.
Opening the 4th G20 Energy Transitions Working Group and Ministerial Meeting, South Africa's Energy Minister Kgosientsho Ramokgopa called on delegates to ensure that Africa's energy transition serves as a catalyst for industrial development.
We must ensure that Africa's energy transition becomes the engine of industrial development and economic diversification, a catalyst for transformation rather than mere compliance. Our ambition is clear: to move from being a continent that supplies raw materials to one that manufactures the final components of clean technologies and industrial solutions that will power the world.
As South Africa continues to signal that climate finance will be a key priority, urging for greater concessional funding flows to support emerging economies, Minister Kgosientsho Ramokgopa emphasized that achieving this goal will require strong collaboration with financial institutions to mobilize the resources needed for a just and inclusive energy transition.
We require financing mechanisms that matches scale of our vision. We call for scaled-up concessional and blended finance, for instruments that de-risk private capital, and for long-term funding frameworks that enable industrialization, job creation, and energy system transformation across the developing world. Africa continues to shoulder an unfair risk premium, one that too often reflects perception rather than reality. The continent's projects are assessed through a lens of historic bias.
Meanwhile, Rafael Mariano Grossi, Director General of the International Atomic Energy Agency, told the media that the World Bank is beginning to warm up to the idea of a just energy transition. He noted that he held numerous meetings with the World Bank President AJ Banga to discuss the importance of supporting this global shift.
I have to say that I did much more than have a meeting with Ajay Banga. We have an agreement between the IEA and the World Bank, whereby the World Bank now is open to consider projects in the nuclear area, and they are relying on the technical advice of the IEA. This was very important because in the past, nuclear projects were not permissible or acceptable for the World Bank.
For Channel Africa News, I'm Innocent Simosa at the 4th G20 Energy Transition Working Group and Energy Transitions Ministerial Meeting in Durban, South Africa.
Are you fluent in French, Chinyanja, Portuguese, and Kiswahili? Are you passionate about radio? And are you looking to work in South Africa? Do you have papers that qualify you to work in South Africa? In that case, we might have an opportunity for you to work for Channel Africa. Send us your CV and demo at newsroom@channelafrica.co.za. Remember, if you don't hear from us within 14 days, it means you have not made it or you have not been selected. Channel Africa, the African perspective. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 20 minutes after 4 p.m. Central African time. Now, one of sub-Saharan Africa's largest ever commercial and industrial power plants is being developed as part of Sonangol's greenfield 200,000 barrels per day Lobito refinery. Now, on the sidelines of Africa Energy Week, Afrexim Bank reiterated its immediate readiness to support the crucial $2.4 billion debt requirement that is needed for the Lobito refinery project. The successful completion of the refinery is pivotal for Angola, moving it closer to energy self-sufficiency and as well creating a surplus of refined products for export. This directly contributes to Africa's energy security by reducing reliance on volatile global supply chains. For more on this, we joined this afternoon by Edson Pongolola, Director of Planning and Management Control at Sonangol. A very good afternoon to you, sir. Welcome to Africa in Business.
Good afternoon. Thank you for the opportunity. Thank you. Good afternoon to all South African. And everybody can hear from Angola.
Yes, thank you very much. Loud and clear. Perhaps let's start off with why financing Africa's petroleum trade routes is becoming increasingly important in the current global energy landscape. Are you with us, sir?
Hello?
Okay, we
lost you here.
Yes, we lost you there for a moment. Let me repeat the question in case you did miss it. I was asking you why financing Africa's petroleum trade routes is of crucial importance right now in the current global energy landscape.
Well, definitely. I think this is something we should have done a while ago. But of course, as we move forward, as we see the need for the continent to industrialize and see the self-sufficiency being promoted throughout different countries in the continent, it is vital that we come together, and we, Sonangol, decided to invest in refining capacity, not only to support and meet current and local demand, but to analyze and explore the regional and the continental demand in general. Because we need to, as a continent, as I've explained throughout the conference, we are a continent full of natural resources, but we're still dependent upon import of various refined products, and not only that, on mineral resources and everything. So our final products need to be prepared and produced locally for us to serve the continent and the country, of course. So it is important for us to invest now, not only to benefit current generation, but also to look forward and benefit future generations as well. So we need to make the continent ready and robust enough to meet current demand and even future demand.
You mentioned regional demand, and I wonder which are the areas of priority, the regions to prioritize, the corridors to prioritize as far as petroleum infrastructure investment is concerned. Which would you highlight?
Well, so at the moment, we Sonangol, we're looking at the more SADC region, so to say. But we're open to explore all areas where demand is present. Of course, refined products demand is present. But at the moment, the focus should be serving the Angolan and also the neighboring countries in the SADC region, of course.
And what are the main financing gaps that tend to be slowing down the development of efficient petroleum logistic networks across the continent?
Well, I think, Philip, at the moment, with other continents, of course, Angola is part of it. At the moment, we still depend on financing from international financial institutions, and we do so with Senegal. We are able to get finance from different financial institutions, but we believe one of the forms to finance all our projects, and we will not only have to depend on financial institutions, we need to find partners, local partners and investors, of course, which we believe we have some in Africa. It's very important for them to join forces and join their investments and meet the projects that not only Senegal is putting forward, but other companies are putting forward. But the gaps, of course, they're all to do with the local financial institution ability to meet the requirements of the projects. For instance, one project like the Lobito refinery is a capital-intensive project. Not all local banks have the capacity to meet the project's demand. So we have to require and acquire financing from international institutions like European, American, and Asian financial institutions. So we need to strengthen local banks. We need to strengthen regional banks. But at the moment, there hasn't been much capacity for local banks to meet the project. These but other projects like this capital intensive.
And what role are multilateral lenders playing? I'm talking about the African Development Bank, for example, the African Energy Bank, Frixum Bank. What role do they play in de-risking investments along these routes?
Well, they play very vital role in the sense that they are part of the group of banks we approach to finance the project. They create lines of investment, not of course with the total investment needed for the project, but they participate as leading banks in some cases, as banks of the portfolio for the project. But one of the institutions that we approached, not only as for this project, but for other projects we have in our portfolio, but this project in particular, Frixum Bank and other banks, they play a very important role in participating in whatever amount of money or funds they're willing to invest or finance for the project.
Could you talk to us?
To the project's bankability, of course.
Right. I wanted to now look a little bit further down the line to a return in your investments as investors. Typically, when you look at infrastructure projects, and particularly on the African continent, what type of timeframes are we talking about? What are the expectations for investors to start seeing their returns?
Well, for a project like this one in the Lobito, the Grandiosity project, we expect to have the return of investment. I mean, the payback period is around 10 to 12 years minimum. They can be sooner. It depends on the price of refined product and the crude oil, of course. They're very dependent on the commodities pricing. But in general, we're looking at a time frame between 10 and 12 years for the return of investment of these magnitudes.
And are there successful precedents?
Which is pretty much
standard, yes.
What? Sorry.
I was going to ask if there's a precedence here that maybe you could cite where there have been investments of this nature that did indeed yield the returns. We know oftentimes, as far as African governments especially are concerned, there's always debt that doesn't get repaid back. What is it that you are pointing to that, is a positive case study?
Well, in our case in particular, I mean, I think I've presented this approach throughout the conference. What happened in particular in Africa, we haven't registered too much investment in refining capacity, of course. But truth is, we do have all of our countries across Africa. They do import refined products, and they pay the refined products in, say, stronger to international companies. But as for Exxon Angola in particular, being an integrated oil and gas company, we do operate from upstream up to downstream, of course, and have different ways of returning the financing to the banks, of course. But in the sense that we have the market to meet, we have the demand present, the current future demand, we have the entire SADC region buying refined products from other countries in Europe or Asia. where all these countries they pay the refined products in stronger currencies. So we shouldn't see as much of a difficulty for the projects to pay back the investments or even financial institutions. We have a very good track record in our relationship with banks. We have borrowed from banks in the past. We keep borrowing from banks when we do pay back according to the bank's requirements. So, yeah. I think the fact that we have a market, we have a current and future demand, I think is a proof that there's market, there's product to be sold, and of course there's money to be gained from the market, yeah.
And that falls slap bang within your portfolio as Director of Planning and Management Control. We thank you very much for your insight and your time, and looking forward to seeing what comes out of the back of Africa Energy Week, as well as the financing, $2.4 billion debt requirement needed for that Lobito refinery project. Mr. Edson Pongolola, we thank you for your time, sir.
Absolutely. Thank you very much.
Thank you. He takes us to exactly 4:30 p.m. Central African time. Let's head over now to the markets desk, where Noluthando Buthelezi is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
With your Africa update indicators this afternoon, I am Noluthando Buthelezi. $1 is trading at 17 rands 37 cents in South Africa. In Botswana, it is trading at 13 Pula 16. In Namibia, it is trading at 17 Namibian dollars 37. The Zambian kwacha is trading at 23 kwacha 69 to the US dollar. Then in Kenya, the dollar is trading at 128 shilling 424. In Ethiopia, it is trading at 144 birr 856. Then in Uganda, it is trading at 3,000 shilling 417. In Tanzania, it is trading at 2,000 shilling 445. $1 in Nigeria is trading at 1,489,000 naira. Then in Egypt, the dollar is trading at 47 Egyptian pound 52. In Tunisia, it is trading at 2 dinar 902. In Algeria, it is trading at 128.74. The Moroccan dirham is trading at 8,955 to the US dollar. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is trading at 2,381 to the US dollar. Looking at commodities, gold is trading at $3,977 and platinum at $1,627 per ounce. The price of Brent crude oil is $64.01 a barrel. I am Noluthando Buthelezi with your business news.
Business news on Channel Africa. The African perspective.
And for the latest from the business of sport, here is Figile Lingwati.
Sports on Channel Africa. The African perspective.
Thank you, Thami. We kick off with football news in the business of sport. World Football Governing Body, FIFA, President Gianni Infantino has announced that more than $1 billion has been invested in African football since the launch of the FIFA Forward program in 2016. Speaking at the 47th CAF Ordinary General Assembly in Kinshasa, the Democratic Republic of Congo, Infantino reaffirmed FIFA's commitment to developing football across the continent and inspiring Africa's youth. He told delegates from all 54 African member associations that football has a responsibility to give dreams and hope to the children of Africa. According to FIFA, investments in the Confederation of African Football Regional Associations and member nations reached $106 billion by September 2025 and are projected to hit $1.28 billion by 2026. And in Kenya now, excitement is building up ahead of this weekend's 27th edition of the Safari Sevens at the Nyayo National Stadium as Kenya Rugby Union confirmed the group stage draws for both men and women's categories. The KRU has received several funds for the Safari Sevens tournament, including $169,000 sponsorship from Tusker Kenya Breweries Limited, which includes $92,000 in cash to KRU and $77,000 for fan experience in the form of Tusker After Party Village. Additionally, KRU has received $35,000 commitment from KCB Bank for the 2025 Safari Sevens. Now on to golf news. Xander Schauffele moved 4 shots off the lead at the halfway stage of the US PGA Tour Bay Current Classic in Japan after cutting a sizzling 8 under par 63. Now, this Japan Ryder Cup country defeat to Europe 2 weeks ago showed 8 birdies. 13 of the top 50 players in the world are competing along with 40 hardy pros. And the overall prize money payout of $8 million US dollars, the largest of any of the remaining 5 events on the schedule, with $1.44 million going to the winner in a nice carrot without a cut. It means everyone gets a paycheck for every journey and the journey, and those looking for FedEx Cup points to secure their status in the top 100 on tour also are guaranteed something for their effort. And into Africa, racing driver Xolile Letlaka insists he's honored to have led Africa's first ever African team to participate at the recent 24 Hours Barcelona at the Barcelona Catalunya. Letlaka funds his motorsports work through his own business into Africa Mining and Exploration and the non-profit Africa Race Together Fund, ART. He's the first black circuit racer promoter in South Africa and uses his businesses and foundation to create opportunities for black and the POC talent, establish a diverse workforce in motorsport, and make the sport more inclusive and accessible. For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Fikile Lingwati.
Sports on Channel Africa. The African perspective. Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
It is now exactly 4:36 Central African time. Still a lot coming up in store for you this afternoon, but we begin with this first. The South African Reserve Bank has noted that the US-imposed tariffs pose a threat for local and global economic growth. Presenting its 2024-2025 annual reports to Parliament's Standing Committee on Finance, the bank pointed out that there is currently no data to indicate the extent of the tariffs' impact, as the third quarter for economic growth data is yet to be released. The Reserve Bank notes that sustained low inflation brings about lower and stable interest rates, which bode well for investment, employment and growth. Naledi Ngobo filed this report.
The South African Reserve Bank has lowered interest rates by 75 basis points since the start of this year. Reserve Bank Governor Lesetja Kganyago says the bank is not a profit-driven institution, but remains committed to its primary mandate of maintaining low and stable inflation in the interest of sustainable economic growth. Kganyago says the bank's preference to target inflation at 3% is yielding positive results.
Of course, lower inflation and a lower preferred target has brought some big wins. Where have we seen these big wins? The first has been in the cost of government borrowing. If we go for a lower target, the benefits will come through lower borrowing costs and a stronger exchange rate that in itself also helps to contain inflation. Government is the most credit-worthy borrower in the economy. So when the cost of borrowing for the government comes down, the cost of borrowing for everybody else in the economy also comes down.
Kganyago says the bank has made progress in delivering its statutory mandate of promoting and safeguarding the safety of the financial system, as well as enhancing the effectiveness and accessibility of payments.
In that payment space, we're saying we are dealing with all payments, digital and physical. So notes and coins will also be dealt with. How are we going to be achieving this? Firstly, we would embed coordinated policy making, which takes place across the strategic focus areas. We would enhance public trust in the SAP through communication and engagement. And third, we would leverage the use of data and technology in the execution of our mandate.
The Reserve Bank notes increased geopolitical tension, critical domestic infrastructure failures, and rapid capital outflows as major risks to the economy. It has further cautioned that administered prices set by government, including the price of water and electricity, also pose a risk to growth, competitiveness, and inflation. I'm Naledi Ngobo in Johannesburg.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
Now, Mira Sanka, who's head of transactions, cleared on an immediate basis. It's TCIB at Pay Inc., formerly Bank Serve Africa, says easing payments between Southern African Development Community SADC countries not only enables faster, more affordable cross-border transactions, but it also promotes trade and advances financial inclusion across the region. She says initiatives such as the African Continental Free Trade Area connect economies, people and businesses across borders through payment corridors such as the Transactions Cleared on an Immediate Basis cross-border payment scheme. To discuss this further, we're joined on the line now by Mira Sanka, Head of Transactions Cleared on an Immediate Basis, TCIB at Pay Inc., formerly Bank Serve Africa. A very good afternoon to you, Mira. I'm sure this Head of Transactions Cleared on an Immediate Basis gets you all the time. Do people just usually just say TCIB?
Yes, people have gotten, good afternoon, everyone. Sorry. Yes, people have gotten very used to TCIB. No one generally says transactions clear on an immediate basis anymore. It's too long for people.
It certainly is, but the shortened version also just rolls off the tongue so much easier. Welcome. Great to have you with us on Africa in Business.
Thank you.
So you say that there is a need for bold initiatives as well as policy reforms. And these are breaking down long-standing barriers when it comes to the payment corridors. What regulatory obstacles are slowing down the creation of new payment corridors?
I think that probably the most important challenge that we face today is the different regulatory policies that we have throughout the SADC region. And one of the initiatives is to create this harmonization between our regulators to ease the manner in which cross-border payments actually happen. And then, obviously, each country has its challenges, and so different regulatory policies do exist. But these are providing hindrances. And so, like I said, one of the big initiatives is how do we harmonize regulatory policies to enable easier transition through cross-border payments.
And one area that really has been an area of focus and concern is the area of inclusivity and making sure that underserved populations, rural populations are not left out financially. So how can payment corridors meaningfully improve financial inclusions for these communities and populations?
So when you look at a payment corridor, like TCIB. So what TCIB does is it provides a rail that allows money to move instantly and affordably between your SADC countries. So much like how you would have a highway that connects cities, by opening these payment corridors, it makes it easier to trade, cheaper and more inclusive. So you get a migrant worker that can send money home instantly and affordably, and that's what TCIB enables, the ability to be able to do that. And our platform looks at whether it's banks or other licensed players, they are able to gain the foundation to innovate and enable cross-border products. So not just bank on bank, but wallet transactions, for example, now become more possible through the payment rail TCIB.
Now, US Pay Inc. have been rolling out, TCIB cross-border payments within the SADC region. What would you highlight as some of your successes, and on the flip side, some of the lessons as well that you've recorded so far?
Banks within the CMA to process their transactions via TCIB. And I think that speaks to the buy-in from our regulators, the support that we're getting from our regulators who recognize the need and are supporting the need to open up more seamless cross-border transactions. And we've had successes. We currently have a major bank on board. We've got other banks that are coming on board. And through this directive, we will see more banks through the CMA region joining TCIB. I think some of the lessons that we've learned, I've spoken about it earlier, is obviously the harmonization, but we are faced with legacy infrastructure that a lot of our customers have, and we're working with them collectively to ensure that everyone adheres to the standards of the G20's principles, which are built against affordability, security, and transparency.
And I wonder what role the African Continental Free Trade Area plays in accelerating corridor adoption.
We've got initiatives that are part of the Africa Continental Free Trade Area. And they've positioned these to address these challenges of high transactional costs, this outdated infrastructure that I spoke about, and the lack of regulatory alignment. So, again, they are working with us, working together to try and eliminate some of these challenges that they're facing, so that we can connect these economies, these people, businesses across borders, and payment corridors, so that we can move money a lot easier and at a lot lower cost.
Certainly a lot of innovation around these transactions. And as you're saying, it's all about not only being efficient, but also getting the right price points that can make this accessible for everybody. We thank you very much for your time this afternoon.
Perfect. Thank you so much.
Thank you, Mira. That's Mira Sanka, head of transactions cleared on an immediate basis. That's TCIB at Pay Inc. And you'll remember that Pay Inc. Was formerly known as Bank Serve Africa. She takes us to exactly 4:47 Central African Time.
In this episode of Channel Africa Conversations, Peter talks to Dr. Thulisile Buddha, an academic, author, and an expert in indigenous knowledge systems. Join us for a compelling discussion on preserving African languages and traditions in the digital era. Dr. Thulisile unpacks the role of educators, explorers, and how technologies like AI can support cultural preservation, and challenges us to rethink how we honor African heritage. You can find the episode on YouTube, SABC Plus, and on our website, channelafrica.co.za. This episode is a must-listen for educators, creators, and change makers across the continent. Channel Africa, the African perspective. African enterprise meets global opportunity. Africa in Business on Channel Africa.
As the world races to cut carbon emissions and embrace renewable energy, coal is one of the oldest fuels and continues to defy predictions of its demise. Global demand hit record highs following the energy uncertainty on the back of Russia's war in the Ukraine. The debate over the future of coal took prominence on the second day at the Joburg Mining Indaba that took place in Johannesburg, South Africa on Wednesday. Dimakatso Leshuru attended the event and filed this report.
Coal, the fuel that powered the Industrial Revolution, is still very much alive in the 21st century. And despite decades of climate commitments, coal demand remains high in developing and developed economies. Tungela Resources Chief Executive Moses Madondo told delegates to this year's Joburg Mining Indaba that coal is still central to keeping economies running.
We still believe that coal is required for energy resilience, industrial competitiveness, and importantly, I think this is not said enough, for the long arc of human development, of course. The progress needs to continue in the march to advancement continues, sometimes at a pace that is fast. The truth is the world needs energy, and coal remains the cornerstone to meet that energy demand. It's a fact.
According to the International Energy Agency, global demand for coal increased by 1.5% from 2023 to reach 8.8 billion tons in 2024, the highest in history. Even though Western nations have scaled down, Asian countries, especially China and India, have more than made up for the drop. Last year alone, the two countries accounted for 34 of the 43 new gigawatts of coal-fired capacity built worldwide. Matondo says that tells a story many in the global north don't want to hear.
Read the importance of those statistics in what we should think is what is to come. We know that existing coal-fired power stations, as it is true in South Africa, are staying in service longer than originally planned, and that there's still a lot of new build that's continuing to come into the space, and it's coming at pace in the last few years. So when we look at the global trends, we see that coal continues to have a significant role in developing economies.
The war in Ukraine triggered an unexpected coal comeback in Europe as many nations scrambled for alternatives to Russian gas. Madondo says this was a global wake-up call. He says energy transitions are not events, they are long processes, and that the real focus shouldn't be on eliminating coal but making it cleaner.
We, of course, need carbon capture and storage, and in some cases, utilization of that capture. And we've seen that work really progress immensely. I think China already has 50 of these units. And in the recent history, we've seen the cost, because cost was prohibitive for many times, continue to improve. I think the cost now is reported to be at 50% from when these technologies were being considered and started.
Technologies like carbon capture and storage, CCS, are designed to trap emissions from coal plants and store them underground instead of releasing them into the atmosphere. China now leads the world in developing and deploying such projects, while countries like the United States and Australia are testing similar systems in pilot plants. Chief Executive at Seriti Resources, Mike Deke, has warned against blindly following international pressure to shut down coal operations. This as African countries remain under pressure to switch to cleaner energy, where some say this will come at the cost of economic growth.
Globally, we tend to listen to the dictates of other countries. There was a time in Europe when we were given instructions, sort of, being told that shut these coal-fired power stations, they will give you money to shut them down. And then we follow. Right now, there is net zero asset managers initiative that is saying we're shutting down. Same applies with insurance. On the insurance side, we were told nobody wants to insure you as coal miners. Now, can we talk?
In South Africa, the tension is visible every day. The country still depends on coal for 80% of its electricity, but Eskom's aging plants have been faltering, yet renewable projects aren't expanding fast enough to fill the gap. Menor Group's Chief Marketing Officer, Ruan North-Nachel, says the problem isn't just policy, it's infrastructure.
For the last 3 years, no new renewables has been added to the grid, and it's a simple matter of there's no distribution capacity for them. There's no wires. Nedbank says 390 billion rand to build the 14,000 kilometers of distribution wires, okay? Last year we built 35 kilometers.
No, listen, that we are behind, I think that
and we'll never catch up because we're competing for the same aluminium and copper as the rest of the world to bring their renewable. So it's a massive race for these commodities. If you look, you should be bullish aluminium and copper for sure, just basis the energy race going on.
Mineral Resources Minister Gwede Mantashe encouraged the miners gathered here, saying there should be more exploration. This is despite the delays from his department in providing operating licenses and the chaos of the cadastral system that miners continue to complain about.
We should be focusing on the value chain of the sector. Exploration is so critical. Beneficiation is important. Research and development are quite critical. And if we can do that, we can maintain our competitiveness and drive sustainable growth. There is no shortcut to it.
For Channel Africa News, I'm Dimakatso Leshoro in Johannesburg.
Africa in Business on Channel Africa.
Lesotho's High Commissioner to South Africa, Ambassador Nzime Yafeta, has called on Basotho abroad to take advantage of new economic opportunities in their home country. Speaking at the Lesotho Diaspora Investment Forum held in Johannesburg, South Africa, Ambassador Yafeta urged delegates to join hands in driving Lesotho's economic transformation by channeling investments as well as expertise back home. The forum, held under the theme Taking Lesotho to the World Through Investment, sought to mobilize the Basotho diaspora to invest in key sectors and help propel the country's growth. Channel Africa's Michael Mbewe filed this report.
Speaking to delegates, Ambassador Ntsimi Jafeta highlighted that Lesotho is entering a new era of economic transformation with growing potential across all economic sectors. He encouraged members of the Basotho diaspora to see themselves as vital partners in shaping the country's development agenda.
Gentlemen, as a country, we are entering a phase of economic transformation with a lot of opportunities in every sector. And we encourage you to seize the opportunity and gain a profitable outcome. Let us embark on this journey together to build a nation that thrives on the collective efforts of its people both at home and abroad. We are keen to work with you to harness your networks in order to channel more investments to Lesotho and create opportunities to move the country forward.
Lesotho's Deputy Principal Secretary in the Foreign Affairs Ministry, Limpo Masilo Mutsamai, praised the fraternal relations between Lesotho and South Africa, its only neighbor using the diaspora to bridge the gap.
Actually, more than neighbors, because Lesotho does not have any other neighbor. It has only South Africa as its immediate neighbor. So it's very important for us to work together, especially because we have been supplying South Africa with people throughout the journey of the two nations. So we've had miners, we've had so many other different experiences going through the times, and now we are looking also at the professionals within both countries. So our diaspora is the most important part of that. The diaspora is the foundation of our relations. And like I said, for South Africa, Lesotho is its own one neighbor, and beyond the SACU customs union, we go into SADC, and beyond SADC, we go into the whole continent of Africa. And right now, we are all about trade, investment, movement of people and goods, and improving all that for the national interests. And national interest does not just mean for Lesotho, but also for South Africa.
South Africa's Department of International Relations has welcomed the initiative, saying it is ready to collaborate to advance Africa's economic diplomacy agenda. Here is DECO's Head of Operations for African Renaissance and International Cooperation, Lerato Simpo.
We are excited to that. It will also give exposure to also our business sector. So we want to have that discussion. With those discussions, we are coming to say we are ready for partnerships, we are ready for cooperations and collaboration through this ARF fund. And we are saying, as we have these discussions and listen today, one of the key aspects that we want to take away, the High Commissioner spoke about economic transformation. And we are saying in closing as DERCO, we want to make the most with the available resources, which will yield more outputs for the betterment of our people, but also for the betterment of the African continent.
That report there, compiled by Channel Africa's Michael Mbewe, takes us to exactly 4:58 Central African Time, 2 minutes to 5 p.m. and 2 minutes before we hand over to the French desk. Pashual is right here, standing by. Bonjour, Julie.
Bonjour, beautiful Thami. Bonjour à tous les auditeurs de Channel Africa. Et sur Vue d'Afrique, tout à l'heure, il sera question du collectif d'avocats qui appelle les autorités burkinabées à libérer l'avocat et militant Guy Hervé Kam. Nous parlerons également de la Centrafrique, Anissé Dologele, déclaré apatride un jour seulement après son investiture par son parti. C'est tout à l'heure sur Vue d'Afrique. Merci de rester connecté. Merci Thami.
Merci beaucoup. That's how we come to the end of this week's edition of Africa in Business. Thank you to our fabulous team, the news team, Jwala Netulengwepe on the economic desk, Nolutando Butelezi, and on the sporting desk, Figile Lingwati. To our production team, producer Mabubu Loka, technical producer Dando Butelezi, and on social media, talent Butelezi. I'm Thami Ngubeni. This has been Africa in Business on Channel Africa. Restez connectés as we hand you over now to the French desk. Standing by is Joël.